It now seems Canada's big banks are getting ready for an increase in default. So CIBC, Scotiabank, BMO, RBC are all putting more money aside to deal with bad loans. You can see the numbers there compared to last year. And that, of course, is raising concerns about what this could mean for our economy. Ian Lee, Associate Professor of Management at the Sprott School of Business at Carleton University, is joining us from Cardinal, Ontario this morning. Good to see you again.
My pleasure, Lindsey.
So the banks appear to be preparing for a wave of defaults. What are you expecting to see?
This is prudent. Remember, these are reserves. In other words, this is a pool of money they're setting aside for losses that could happen in the next 12 to 18 months. These losses have not yet occurred. That's why they're called reserves against future losses. But for the bigger picture is, any of your listeners saying, oh my goodness, our banks are in trouble. Our five banks, the big five, and we all know who they are, BMO and CIBC and Royal and TD and Scotiabank, they have total assets of around $5 trillion. And they are some of the strongest banks in the world. Full disclosure, I worked in the 70s and 80s when interest rates hit 20%. I was a mortgage manager with BMO. But all of our Canadian banks, and I don't consult or have any relationship with them today, but they are incredibly strong. And we have one of the most rigorous regulatory systems in the world concerning banking and mortgage lending. So yes, losses are going up because the interest rates are going up and the economy is slowing down. But Canadians don't have anything to worry about in terms of the stability of their banks.
I've got to ask you about just your personal experience. You mentioned that you were in the banking system in the 80s versus now. The sense that you have of how we are compared to, that decade, what do you feel about where we are at right now?
Probably some people won't like what I'm about to tell you. It was far worse then. It was far worse because, first off, we were far less wealthy in 1978, 79, 80. Secondly, the inflation went to 14%, and the interest rates went to 20%. And I can tell you, as a former mortgage manager, banks were far less sensitive and accommodative if you couldn't make your payment. It was really simple. You make your payment, go get it from mom and dad if you can't afford it, or sell your house. That was it. This idea of extending the amortization was just not done. Today, we're much wealthier. Banks are much more accommodative. And so, yes, it hurts to those people. My heart goes out to young people who are finding it really tough, not trivializing it whatsoever. But there are more measures in place. There are more tools in place to address those people who are finding themselves more stretched out.
Speaking of stretch out, let's talk about credit cards. Seem to be the main area of concern. Who is going to feel that, and just how bad could that get?
Well, I'm glad you asked this, Lindsey, because I know the regulator, OSFI, and I respect them, but I just disagree with them. They talk all the time about mortgage risk, default risk. For 75 years in this country, the mortgage delinquency ratio has been the lowest of any type of credit, period. As we speak right this very minute in this country, the national default on mortgages is 0.2. That means 99.8% of Canadians are making their mortgage payments on time. Now let's turn to where the delinquency is occurring, and you just pointed to it. It's credit card delinquency. It is going up very dramatically. Unsecured loans, personal loans. I'm not talking mortgage loans. I'm talking, loans where you have a consolidation and there's no, they didn't take a lien on your house, a mortgage on your house. This is where we're going to see delinquencies increase with the rising interest rates, because consumers are rational, Lindsey. Look, you have an unsecured loan, they can't touch you, and you have a mortgage. Which one are you going to default on if you can't pay both? Right. Well, you're going to default on the unsecured loan because you're not going to let go of your house because you got to live somewhere. Yep. So that's the one payment you pay no matter what. My joke is about Canadians, it's sort of a facetious, but Canadians will go to a bank and rob a bank in order to get the mortgage payment to pay the bank if they found they couldn't pay it. I mean, I don't mean that literally, of course. But your mortgage, you pay absolutely to the very end.
Professor Ian Lee, I always appreciate your time. Thank you.
My pleasure, Lindsey. Thank you.
Have a good weekend.
Hey, thanks for watching. If you liked this, be sure to subscribe here, or you can check out more Your Morning videos right here.